Hey, everybody. Welcome to the show. What a week for earnings that we have. We're going to talk about a few stocks that we looked at last week, including United Airlines, Goldman Sachs, Abbott Labs, Netflix. But this week, we really roar into earnings. Lots of big names, everybody from Tesla and GM to American Airlines and Southwest Airlines and much more. In fact, you're going to want to use that chapter feature at the bottom of the page because we're going to be talking about a lot of stocks that we have earnings on this week. Let's get right to it. Good day, everybody. My name's Jeffrey Beamer. I'm the senior investment strategist over at ewotrading.com. Welcome to Earnings Call. We have a bunch of earnings. In fact, we're watching over 85 stocks ourselves. There's over 600 companies declaring this week. And of those 600 plus, we're watching about 85 of them. We're not going to talk 85 stocks on this week's show, but we're going to touch on a lot of the biggest companies with the biggest names and the highest option volume on those. But let's drop down and talk about some of the headlines from last week. We're going to be looking at United Airlines. Now, this, believe it or not, is one of the premium airline stocks right now. It's got one of the higher stock valuations. Last week, we had an expected move greater than 10%. We talked about it. And you can see here, the next day after the earnings date, you can see the pop up after earnings. The stock moved about 12%. This was on an earnings beat. The stock reached a 52-week high as it shed some unprofitable routes that it had. If I pull in the stock chart here and give a little bit more data, you can see that this thing is way at all-time highs. In fact, this thing is a little bit elevated, vertical move like that. For those of you that know how to short stock or use specifically those of you that like to use puts, this might not be a bad place to do it, honestly. I'm not calling for a big collapse, but anytime you get a vertical move like that, it's hard to sustain it technically. We might see a little bit of pullback. More on that some other time on another day on another show. But that is UAL. It moved more than its estimated move. Then we go over to Goldman Sachs. It had an estimated move. They had earnings on Friday, an estimated move less than 3%. And believe it or not, even though the stock had a little bit of volatility during the day, it did not move 3%. In fact, the stock closed down 7 basis points, which is 0.7%. Okay. Just didn't really move at all. Now, today it's having a little bigger move, down 2%. But on that earnings day, as you'll see here, it worked out great for our trade. Goldman beat their earnings because of market performance and their wealth management division. They also declared a $3 dividend. But, the stock, again, it didn't really do much for the stock. And you can see here, going into the end of the week last week, it just consolidated and didn't really move at all. Today, really, it's getting a nice big move, but we're out of that trade. And we'll talk about that in just a moment. All right, let's go over to Abbott Labs. This stock had a estimated move of less than 5%. In fact, the stock closed higher by only 1.35%. This was on an earnings beat and a revised outlook for the full year of 2024. But again, the stock is pretty much just stuck in a range here. A little bit of volatility here. It's down 1.88% today. But as you can see, it's just kind of churning along. Let's get a little bit more time here. And you can see that it made a nice recovery off of these lows. It's getting close to a double top high here up at the 120 level. If any of you are bullish on this, it's really got to get through that 120 level if it's going to move any higher. And that is pretty heavy resistance. So, but as far as earnings go, it moved just as we thought, way less than 5%, moving only 1.53% as we went through earnings. And then finally, the big name last week was Netflix. All right, Netflix, boy, it did move greater than the expected move, but not by much. The estimated move was 11%. The stock moved higher by 11.09%. That was the closing price on the day. That's this big candle up here, as you can see. I'll remove Probably should have removed the lines on the other stocks, but you can see a big gap up and then a little bit of follow through today. Stocks up about 48 basis points, but Netflix moved higher on a revenue beat, and then kind of confirming double digit subscriber base, subscriber growth year over year, which is really solid, really good news for Netflix. But you can see here, boy, these highs on Netflix, this stock just keeps going up, up, up. It's in a great channel, moving higher, and been a great stock for those of you that are long Netflix here. All right. So those are some of the headlines from last week. And as I mentioned, Netflix moved a little bit greater than its estimated move, but it was more than 10%, which is our proxy for a big move. Okay, those double digit moves, and it moved higher by a little over 11%. Okay, so let's get into this week's list. Boy, an earnings preview for this week is really hard to put together. And I wanted to kind of highlight some of the stocks on this list. We have some quiet stocks that we think are going to move a little bit less, like Philip Morris, Lockheed Martin, and Texas Instruments. They all have earnings on tomorrow, on Tuesday. Wednesday, we're looking forward to Tesla. I mean, that we expect a big move from Tesla. In fact, let's go through some of these in detail, because I really want to highlight some of the quiet ones, which are somewhat surprising, and then some of the potential breakout ones. But as you can see, there's big names on here: Coke, AT&T, and then also a couple of names that aren't listed here that I do want to touch on. So let's get into it here. Let's start with Philip Morris. Okay, this stock declares on Tuesday before market open. So tomorrow morning, the stock has an estimated move less than 4%. So this is a big company. Takes a lot to really move it, although you can see this big bullish move for Philip Morris coming in here. Now we're in a little bit of a pullback. All right. And the move could change this little pullback and start moving it higher, or it could be follow through. We will see after earnings, but those are tomorrow morning. Less than 4% move we anticipate for Philip Morris. Now, Lockheed Martin, also look at this. It's a $600 stock. Okay. And you just don't think about these companies, but these are billion and billion dollar companies. All right. And it takes a lot to move them. And Lockheed also has an estimated move way less than 10%. This only has a estimated move of 4%. Okay. Going into earnings, which it has before market open. So both Philip Morris, Lockheed Martin have earnings tomorrow morning before market open. Both we anticipate to be pretty quiet. That's why some of these don't, market could move on some of these names. Believe it or not, S&P is only down by 28 basis points today. That's not very much. That's about 1/4 of 1%. Not big move yet, but we will see. Next on the list is going to be Texas Instruments. All right. Now, this is a nice volatile stock. One of my favorite stocks to kind of what we use an option strategy called a collar. You can see this thing is a mover. It's valued up around $200, $195 right now. But we, again, expect a move actually through the earnings event of less than 5%. Now, this has earnings after market close tomorrow. Okay, so Tuesday, October 22nd, after market close, we will hear from Texas Instruments. I'm actually looking forward to that. That would be a quiet candidate, as you see here. And then we head into some of the names that we're really looking forward to on the next day. Tesla is coming up on Wednesday after market close. This stock has an estimated move of over 13% through earnings. There could be some real opportunity here for a straddle or strangle. This is known as a breakout candidate. And you can see this is good news here. It's consolidating for the past week going into earnings. This is really ideal for that type of setup. Now, if the option pricing is there, okay, we would want option pricing to show that our break evens are, say, 10% or less, and then we're expecting an estimated move of 13% or more. That would be great. That would lead to a very profitable trade. Also coming up later this week is Coca-Cola. Okay, this is it. This is a quiet stock. Okay, and believe it or not, this is one of the quietest stocks, Coca-Cola. we have an estimated move of less than 2%. Really don't expect a move at all. Notice when I pull this stock up, the pricing over here is in $1 increments. What I like to do when they're in $1 increments is actually pull them apart and go to at least $2.50. But most of the time, I like to make it to where they're $5 apart, and you can actually see how quiet this stock really is. Okay, it looked like it was in a great uptrend, but this stock is very gentle, doesn't move very much. Awesome strategy for selling premium around earnings, as we only expect a 2% or less move for the stock. Next up is AT&T. This stock also is not a big mover. However, it is a big mover when it comes to implied volatility. We often put trades on AT&T well in advance of earnings and try to ride the rise in implied volatility. This has an estimated move of only 5% going into earnings. Okay, and there is some good value here. This is a $20 stock, so it's easy to trade and light on the risk. Usually, when you price it right and do the right strategy, but we're only expecting a move around 5% on this on AT&T as they have earnings coming up on Wednesday before market open. Okay, so Wednesday is going to be a busy day, as you saw on that sheet. We got lots of stocks here. In fact, over 600 declaring this week. It's going to be every single day, including today. We had earnings this morning before market open. We have earnings today after market close. All week this week we have earnings. Okay, so next is Boeing. Boeing's really been in the move, on the move here lately. It did form a little bit of a V bottom. We haven't really followed through much to the upside here. This has earnings on Wednesday before market open also. And with all their trials and tribulations, we still only have an estimated move less than 6%. Now, this does not mean that it can't move 10% or 12%. With all the news out there, it surely could. But right now, the pricing and the historical moves are coming in right around 6%, although it is up 2.68% today. So it's having a nice day, well off its highs, as you can see on that candle right there, well off its highs today, but still up for the day. Now, a trade that I like to watch here is Decker's Outdoor. This has earnings on Thursday after market close and has an estimated move greater than 15% for Decker's Outdoors. All right, an estimated move greater than 15%. We really look to see this stock bouncing around through its earnings event. And for me, this is kind of consolidating here in the past week or two, a consolidating action for a big stock that's trading in a $10 range between 155 and 165. That is a what we would think is a consolidating move, and going into earnings, which are Thursday after market close, greater than 15%. Okay, coming down to the end of the list, but no less than potential market moving stocks here. We have UPS. Now, why would UPS be important? Well, not only are they a big, well-known company, but we're heading into prime shipping season. Now, the earnings that are coming up on Thursday before market open are not going to include, obviously, shipping over the holidays, but it is through one of their slower part of the years. That's why we have an estimated move here of less than 8%. All right. A pretty quiet stock, but that's kind of an average move. And that's why you didn't see the next three stocks on my list, because they're all right there in that 6, 7, 8% move range. Really not very quiet. They're quiet, but not ultra quiet like Coca-Cola. But then they're not breakout stocks like Decker's or Tesla. All right. And so what I'm talking about on our last three stocks here are GM. General Motors has earnings tomorrow morning, 10:22. That's Tuesday morning before market open, and it has a move of 7%. Okay. A decent move, either up or down. But again, it's just kind of one of those, okay, which way do I go here? Do I, what kind of strategy do I deploy? It's on the edge of a good potential breakout strategy, but also is pricing going to allow me to do a sell premium into this and do some sort of quieter consolidating strategy? That's why these 7% movers are kind of tough, especially when they're priced at in the low, right around that $50 range or below. Those are often pretty tough. So GM declares tomorrow morning, and then we have two airlines. We have American Airlines coming in on Thursday before market open. It's also estimated move is less than 7% is up there. In fact, all three of these stocks that I'm talking about, GM and American Airlines so far, and Southwest next, have moves less than 7%. But this is Thursday before market open. And then we have Southwest Airlines, as I mentioned. Got to show a little love for Southwest Airlines, stock symbol LUV. They have Thursday before market open. So we had United Airlines last week. We have American Airlines and Southwest Airlines this week. All right. And moves less than 7% for these two, where we had a big potential move for United Airlines. Not so much for these two. Southwest has an activist investor trying to get board seats. So that could be a stock to watch, definitely a stock to watch on Thursday to see what kind of news comes out about that challenge with their activist investor. All right. So with that, that's kind of our earnings outlook for this week. Lots of big names, potential market movers. The market could really move if some of these stocks move either more or less than their estimated moves. But let's get into last week's trade. Last week, we talked about Goldman Sachs, one of the financials, a big company. We don't really we didn't expect a big move for the stock. Believe it or not, you can see the stock kind of climbing up there, potentially being a little volatile. But what we're focused on is just through the earnings event. Okay, so this is a strategy where we sell premium, meaning we take in a credit on the trade. We do buy what's called the wings. That hedges our position and minimizes our risk. But we take in more premium by selling than we do on the buying of the wings. That generates a credit. And if we go to see the results, this stock, we allowed this trade to expire worthless on Friday. Okay, the stock traded higher. I talked about this a little earlier. Ended the day up, or actually down 7 basis points. Okay, 7 basis points, not much of a move at all. And that allowed us to allow all legs to expire worthless in the trade. And that was just shy of a 50% return on risk in just 4 days. Okay, there's not many places where you can get that type of return that quick. Okay, in just 4 days, and almost 50% return on your level of risk. Very successful trade. After we edged out a little winner the previous week. This week we're back to our winning ways. Our profit was about $166 per spread. That's a 1.6% return on our hypothetical account of $10,000. Okay, that's a 1.66% return in just 4 days. Okay, at a minimum trade. Most, typically people trade more than one contract per trade, but this was done with just one contract. Now, so that was last week's trade, and this week's trade, you might be able to guess. You might be thinking Tesla, but no, we're not doing Tesla. We're going to do Deckers Outdoors. All right, Deckers with an estimated move greater than 15%. Just can't pass that up. Stock is consolidating nicely. Here, we're looking at a straddle, or a strangle. We're buying a call and buying a put at two different strikes with the same expiration. So 2 different strikes with the same expiration. And what we're doing here is this looks to be the buying the 160 calls, buying the 155 puts on that strangle. It's going to be about $1,000, probably a little bit less than that, or a little bit more than that. I think this is about $1,400 for Decker. Sorry about that. A little bit about $1,400 would be the debit here on this for this strangle. But again, this move would require about a little less than a 10% move higher or lower, and the stock is looking at 15% move higher or lower. So that is why we're doing a breakout strategy on a stock like Deckers Outdoors. So everybody, I appreciate you joining this week on these breakout strategies. We have a free guide that you can download available at our website. You can go to ewotrader.com/straddle to learn how we trade these big breakout stocks, because they're the exciting ones. Even though those quiet stocks, Goldman was exciting watching through earnings and looking how much it didn't move was exciting. But these breakout stocks are often really exciting, especially when they do move. So you can download that free guide. but join us each and every week. Please like and subscribe. And we do this every week, talking earnings here on Earnings Call. Big week ahead. Everyone have a great trading week, and we'll talk to you again soon. Take care.